You are listening to chartingwealth.com for Friday, the 18th of August, 2017. We see that stocks are down for the day. The S&P 500 down 1.56%. The biggest loser, the Qs, the NASDAQ 100 down 2.04%. That's the biggest down we've seen in quite a while. We see, likewise, bonds are up 0.75% and gold up just over 0.5% at 0.51%. Let's jump right into what's going on the S&P 500. Of course, we had that dual crossover going down both on the weekly chart and on the two-day chart back last Friday. We've been waiting for the signals to get us in. Of course, as we zoom into what's been going on the last few days on the two-day chart, we can see that we had at the beginning of the week sort of a spinning top, a green spinning top. Not a lot of action. Movement was all within the down candle on the prior two-day candle ending on the 11th. That was the spinning top was on the two-day candle ending on Tuesday the 15th. However, Thursday was a big, Wednesday and Thursday were interesting days. We now have a red down candle, huge wick on the bottom, not quite as long a wick on the top. As we get even closer, we look at that 4-hour chart, huge movement down in the afternoon. Of course, we had down movement in the morning, and we saw that crossover occur as that 4 o'clock or late day candle, 4-hour candle was being drawn. If we look at that 2-hour chart, we can of course see there was a potential jumping in point there on the 2-hour chart at noon. Of course, on the 4-hour chart, we just had that candle close. So if you're a 4-hour charter for your trigger, look in the morning around 10:30 what things look like and if you have a good jumping in point, because again, remember, 4-hour candle in the afternoon doesn't end until the end of the day, but we do have triggers going off, getting us into down movements. And again, the reason we have the weekly chart down and the two-day chart down, we had the pullback that we required, and now we've had the crossover going down and the triggering event. Okay, let's go back to that weekly chart. See what's going on the Qs. Big down day for the Qs. Of course, it's been crossed over going down on the weekly since the 16th of June. And as we look at the two-day chart, we can see that it crossed over going down back on Friday the 11th, same time that the two-day trigger fired on the S&P 500. Of course, we had a bit of an up 2 days following on Monday and Tuesday, and then the Wednesday and Thursday candles again down, huge wick on the top and the bottom. Now as we zoom in a little bit, see what that 4-hour chart is doing. Of course, about the same thing. It down in the morning, big down in the afternoon, and of course the trigger is now set. If you're a 2-hour charter, and again, there are dangers with that, but in a downtrending market, not a bad thing to necessarily do. The triggering event was after that noon candle drew. The jumping in point would have been somewhere around 143.55. And of course, what did you see happen at the end of the day? All the way down to 141.83. So we will continue to follow these things as they develop. Rules are still in effect. Look for a jumping in point if you're using that 4-hour candle to get in. Sometime after idiot hour is over tomorrow, after the first hour, the market is open from 9:30 to 10:30. Around 10:30, see what things look like and how those candles look. Could be a bit of a recovery tomorrow. You might see a bit of slacking off because of the big down day. Now let's keep moving through the weekly chart. What do we see going on TLT? Of course, it was primed. We had all the way back on February the 7th, TLT crossed over going up. And of course, we had the two-day crossover going up. And again, we're triggered on the weekly and the two-day. The two-day crossed over going up back on the 9th of August. And as we zoom into the 4-hour chart, what do we see? We, of course, see that late in the day, it crossed over going up on the PPO, the price percent oscillator. Derivative oscillator is not yet crossed over. If we look at our 2-hour chart, what do we see? Of course, it triggered there on the close of the noon candle as things were soaring. Remember, TLT, that is bonds and gold, typically should be going up as the stock market's going down because they're considered safer havens for your money. And we see that happening, of course, with TLT. The triggering event on that 2-hour chart would have been jumping in after the close of the noon candle. Let's go back to the weekly and take a look-see at what's going on with gold, up about a little over 0.5%. Of course, gold had a triggering event, the weekly vertical crossover on Friday, this last Friday, the 11th of August, and we continue to see gold up going on 6 weeks now. If we look at our 2-day chart, we can see it crossed over all the way back on the 24th of July. But what's going on that prescient 4-hour chart? Getting close to crossing over, going up. Keep an eye on things. You might have a jumping in point at the close of the 4-hour candle around noon tomorrow. It'll close at noon, so you may have a jumping in point after that. Keep an eye on it. I don't like the fact that we're still pretty heavy negative as far as the derivative oscillator goes, but we'll continue to watch that. Okay, folks, that's where we are as we end the day. If you're going to chart this and jump into a practice trade, please keep your eye on the charts. We do have potential jumping in points, of course, for gold. Well, for everything. For gold, for TLT, for the S&P 500, and for the Qs. Jump in the one you think is the most fun and the one you're most interested in, you feel the best about. If you want to trade more than that, I would suggest you only maybe do one more. It's hard to keep track of 4 potential trades going on. And when you're trading with real money in the future, my recommendation is always just one at a time. But that's for you to make your own mind up. We're not a stock calling service. We don't give market advice. We're an education firm. We want you to practice. How do you practice? You print yourself off the trade worksheet. We have that available to all the subscribers to the Daily Market Podcast. If you're not already a subscriber, go to chartingwealth.com, sign up. It's easy to do. Put in your first name and your email address for free. We will send you the whole package. You'll get our daily market reviews, which is a video that you get every single day. In addition to that, you'll get our How to Read a Stock Chart video that explains our method and why we do what we do and how it works. You also get the layout that we use at freestockcharts.com. It also works with TC2000. And freestockcharts.com, of course, is the free option. And you get our trade worksheet, which we want you to fill out when you enter into trades as you go through the process and as you exit your trade. Also, you'll get our you'll get our market worksheets, both our daily, you should be filling out on a daily basis, and then over the weekend for the Monday opening of the market, the weekly market worksheet. And lastly, those of you who want to take or retake our quarterly training course, please make sure first you have to be signed up. You actually have to be a subscriber, and we show you how this quarterly chart works and how it works back in time wonderfully well, gets you into and out of the market for long-term runs. And again, not giving market advice. This is for you to practice trade until you get good at things, can make your own mind up. But it is amazing how it would have gotten you into the market and out of the market with a very, very smart moves as you go along. And in fact, I got the wrong one pulled up. It's the S&P 500. I was like, wait a minute, that didn't look nearly as good. The S&P 500. And again, people say, well, does the quarterly work on all charts? No, it doesn't. In fact, it doesn't work on the Qs, which is the NASDAQ 100, very well. Actually gets you out too late and gets you in okay. But again, it is not, again, all charts don't work all the time for all the different ETFs and stocks. That's why you have to practice. That's why you have to back test. That's why you got to look at these things. But if you want to get our quarterly chart training, make sure you're a subscriber to chartingwealth.com's daily market review. And once you subscribe, simply reply to that with an email back to us saying, hey, can I get the link to the quarterly chart review? If you put the word quarterly in there somewhere, you will get it, and you can tell how beautiful this thing is. Gets you into the market at the right times, gets you out of the market. And we also explain the Trump effect, which is to me one of the most curious things I have ever seen. It has never shown up until Trump. And of course, the market has been soaring since he got involved. So that is where we are as we end the day on Thursday, as we go into Friday, the 18th of August. We so appreciate you being with us. If you have questions, problems, concerns, you can always write us, cw@chartingwealth.com. All the best, my friends. God bless from the whole team here at Charting Wealth.